Crypto launch dates. They're rarely set in stone, and BlockDAG is no exception. The project initially announced February 16th as their launch date. That date has passed, and now it's been extended to March 4th. The question on everyone's mind is simple. Will it get extended again? Let's analyze this situation logically, without hype or emotional reactions. In the cryptocurrency world, launch dates function more as targets than promises. Unlike movie premieres with fixed schedules and pre-sold tickets, crypto launches frequently shift. This pattern isn't unique to BlockDAG. It's happened with hundreds of projects, including many that later became successful. When BlockDAG announced February 16th, it created urgency. People prepared funds and anticipated immediate exchange listings. Then came the extension to March 4th, triggering two predictable reactions. Supporters claimed it was for development, security, or strategic timing. Skeptics suggested it was to extend fundraising. Both perspectives contain valid points. Cryptocurrency projects operate differently from traditional companies. They lack quarterly audited earnings, public shareholder meetings, and strict regulatory filings. Many function globally across jurisdictions, operating in regulatory gray areas. This environment naturally creates timeline flexibility. A single launch delay might stem from technical audits, exchange coordination, liquidity arrangements, marketing alignment, or legal compliance. These processes genuinely require time, especially for projects planning major launches across multiple exchanges. However, when delays become a pattern, red flags emerge. So will March 4th happen, or will we see another extension? The honest answer is that another extension remains possible. Market conditions, Bitcoin volatility, incomplete liquidity arrangements, or unfinalized exchange negotiations could all trigger further delays. Projects prioritize launch momentum because a weak start can permanently damage price psychology. From a strategic perspective, extending a pre-sale while funds continue flowing in helps raise additional capital. More capital means stronger liquidity pools, increased marketing budgets, and coverage for exchange listing fees. The counterargument is equally compelling. Each extension slightly erodes trust. Investors begin questioning whether delays will become a recurring pattern. Trust in cryptocurrency is fragile, built through consistent execution rather than announcements. When dates shift, transparency becomes crucial. Clear explanations, visible development progress, and verifiable updates minimize damage from delays. Conversely, vague communication, excessive promotion, or avoidance of specifics gradually weakens confidence. Many pre-sale cryptocurrency projects strategically extend timelines when early investors continue buying. The psychological momentum during pre-sale creates powerful social proof. Funding milestone announcements generate FOMO, driving additional purchases. From a business standpoint, extending a successful pre-sale makes sense. Serious long-term projects balance fundraising with credibility. When extensions appear designed primarily to maximize inflows without delivering concrete products or exchange presence, suspicion grows incrementally. Market timing also influences launch decisions. Releasing during weak market conditions can devastate short-term price performance. If Bitcoin is correcting or alternative coins are declining, even strong projects may list below expectations. Teams understand this dynamic and sometimes wait for more favorable sentiment. This represents strategic timing rather than manipulation, though excessive waiting breeds doubt. Investors often mentally calculate profits based on specific launch dates. When those dates change, frustration emerges. Some immediately label it a scam, while others blindly defend every delay. The most rational position lies in neutral realism. Could the March 4th date extend again? Yes, that possibility exists, and investors should mentally prepare for it. In cryptocurrency, especially pre-sale stage projects, final dates sometimes prove flexible. This uncertainty doesn't automatically indicate malicious intent, but it does highlight the inherent unpredictability. Looking at cryptocurrency history, many projects have delayed mainnet launches, token generation events, and exchange listings. Some later achieved massive success, while others disappeared. The critical difference wasn't the delay itself, but rather transparency, product delivery, and long-term execution. Rather than fixating solely on the launch date, consider deeper questions. Is development progress visible? Can partnerships be verified? Is communication consistent? Do updates contain technical substance beyond marketing hype? Is the team public and accountable? Are audit reports legitimate and accessible? Remember that cryptocurrency projects are essentially startups, and startups pivot. Timelines change and roadmaps adjust. In traditional startups, delays occur behind closed doors, but in cryptocurrency, everything happens publicly, amplified through social media, making every delay appear dramatic. Investor psychology follows predictable patterns. Early investors typically remain calm after a single date change. Anxiety increases with a second delay. Without clear justification for repeated extensions, panic selling begins even before listing. Teams understand this dynamic, which is why they generally avoid multiple extensions due to increasing reputational risk. If March 4th gets extended again, pay close attention to the explanation. A detailed technical justification differs significantly from vague references to strategic reasons. The communication tone provides important clues about project legitimacy. Before listing, teams must secure liquidity pools. Insufficient presale funds might prompt extensions to strengthen liquidity depth, as weak liquidity causes extreme volatility at launch. However, extending presales creates potential oversupply pressure. More tokens distributed during presale means more potential sellers at launch. If many early buyers seek quick profits, listing day could experience heavy selling pressure. Exchange negotiations add another layer of complexity. Centralized exchanges require compliance checks, technical integration, liquidity guarantees, and often substantial listing fees. Incomplete processes may delay launches. While decentralized exchange listing is technically simpler, it provides less visibility, leading teams to coordinate both approaches for maximum impact. Some cryptocurrency projects deliberately extend deadlines to maximize fundraising without immediate listing intentions. This reality exists in the industry, though not necessarily with BlockDAG. Cautious investors monitor patterns rather than ignoring delays. If the March 4th launch proceeds smoothly, confidence will quickly recover. Markets forgive delays when delivery follows. However, another shift would intensify scrutiny, divide communities, and heat up discussion forums. This represents a normal cycle in cryptocurrency development. Never invest based solely on countdown timers or hype. Always assume timelines might change and never plan your financial life around specific cryptocurrency launch dates. Regulatory climate adds another variable, as token launches sometimes face compliance complications across jurisdictions. Projects that repeatedly delay while maintaining aggressive urgency-focused marketing create concerning contradictions. Transparency in marketing messages should align consistently. As an investor, focus on risk management rather than emotional defense or attack. Ask yourself whether you would panic if another extension occurred. If yes, you might be overexposed. Sensible investing means maintaining comfort even when timelines shift. Cryptocurrency differs fundamentally from fixed deposits. It represents high-risk venture territory with fluid timelines. Potential returns compensate for uncertainty, but uncertainty remains inherent to the investment class. Two scenarios exist. In the first, the March 4th launch proceeds with strong liquidity, legitimate exchange listings, and healthy price discovery. The February delay becomes irrelevant history. In the second scenario, March 4th extends again with unclear reasoning, significantly weakening investor confidence and lowering price expectations before listing. The mature approach involves monitoring actions rather than promises, watching delivery instead of countdown banners, and observing transparency beyond excitement. In presale models, momentum psychology proves critical. Every extension requires careful communication to maintain momentum. Declining communication quality raises more concerns than the delay itself. The team may genuinely need additional time for technical reasons. Blockchain development, particularly BDAG-based architecture, presents significant challenges. Security audits, network testing, and implementation require time. Rushing could introduce post-launch bugs causing more damage than delays. Evaluate based on cumulative evidence. One delay represents normal development. Repeated unexplained delays constitute warning signs. Remain rational if already invested, avoiding emotional reactions to rumors. If considering new investment, price your decision assuming potential additional delays. Cryptocurrency projects operate more like startup fundraising combined with global digital speculation than regulated public corporations. Timelines remain flexible, outcomes uncertain, and both potential upside and risk remain high. Could BlockDAG extend again? Yes, that possibility exists. Will it definitely extend? Nobody can responsibly make that claim. What matters more is communication quality and whether real product and exchange delivery follow. Stay analytical. Never invest what you cannot afford to keep locked longer than expected. And remember that cryptocurrency offers probability rather than certainty.